You heard of the 3-to-1 Tesla stock split? With this, you have the chance to get rich. Make sure to stay tuned and keep watching to find out. Getting rich is undeniably every person's dream, especially those who work hard enough to earn a decent amount of money. So a lot of people see Tesla as a way to get rich or as a means to retire early, both being everyone's goals in life. In today's video, you will see how to get rich off the Tesla 3-to-1 stock split. A lot of investors and analysts alike are always on the lookout for well-performing stocks, and Tesla, despite its current performance in the stock market, is still considered a good investment by most. The stock market is pretty much unpredictable, Tesla included, so investors usually observe the movements of the stock before buying in. Tesla is an American automotive and clean energy company that designs and manufactures electric vehicles, battery energy storage from home to grid scale, solar panels, solar roof tiles, and related products and services. Tesla Motors was initially founded as an electric car maker. The company designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States and other parts of the world. Automotive and energy generation and storage, according to Morgan Stanley's Adam Jonas, renowned Tesla bull. The current landscape for EVs is a race, and Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21, while other companies are still at mile 2, and others are still tying their shoes, figuratively speaking. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. Indeed, experts say that Tesla is leading in the EV market today. Because of this, each and every piece of news about the company creates a buzz, just as it did with the recent stock split announcement. We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity, all of which, in our view, may help maximize stockholder value. Tesla said in a proxy filing with the Securities and Exchange Commission, unlike other manufacturers, we offer every employee the option of receiving equity. It added in the said Sec C filing. The company wrote, our success depends on attracting and retaining excellent talent, and that highly competitive compensation packages offering every employee an option to receive equity helped Tesla to do that. It was huge news when Tesla announced a potential 3-to-1 stock split recently after the board approved it. It can be noted that the company last split its stock in a 5-for-1 stock split in August 2020, and its shares rose 3.5 cents. As retail investors have expressed a high level of interest in investing in our stock, we believe the stock split will also make our common stock more accessible to our retail shareholders. Tesla announced that its board of directors has moved to execute a 3-to-1 stock split for the company's common stock. This basically means that if you own one Tesla share, you will get 2 more, according to them. This move will make the ownership of Tesla stock more available for both employees and investors alike. It is actually commendable that this move is partly to make its shares more accessible to retail investors. The said announcement came after the company's shares had 42% of their value this year. Shares of Tesla were up by more than 1% after hours, having closed at $696.69 on the day of the announcement. While this value appreciation has led to our employees benefiting enormously through the years, we want to make sure all employees, no matter when they join, have access to the same advantages. The filing said, Tesla says the 3-to-1 stock split would be executed via a special dividend given to investors. Some may recall that in March of this year, Tesla said that it would ask for authorization for the stock split at its annual meeting. Now, the company is disclosing how that split will go down. In the same CSE filing, Tesla stated the primary purpose of the authorized shares amendment is to facilitate a 3-for-1 split of our common stock in the form of a stock dividend. They further added to say that as of June 6, 2022, we have 1,036,390,569 shares of common stock outstanding. And the current number of authorized shares of our common stock is 2 billion, which insufficient to effectuate the stock split. Our board intends to approve the stock split subject to and contingent upon stockholder approval of the authorized shares amendment. Stock split is cosmetic and could mean that smaller investors feel they can afford the stock, but those investors are minuscule compared to major institutions. Many brokerages already offer investors fractional trading, allowing small investors to buy a slice of seemingly expensive stocks. Make sure to hit the like and subscribe button to see more Tesla stock content, stock splits, do not change the underlying value of a company. They simply divide it up over more shares. Still, they are generally viewed as a positive move that suggests optimism on the part of management over a company's future prospects. What is a stock split exactly? A stock split divides existing shares into smaller pieces for greater accessibility. This causes the total share count to go up and the stock price to go down. Imagine a stock split. Someone cutting a freshly made pizza. Cutting the pizza into slices doesn't change anything fundamentally. It just makes the pizza easier to share and eat. In other words, consider the 3-to-1 stock split with a stock price of $300. If you owned one share of the company on the day of the stock split, that one $300 share would turn into 3 $100 shares. A company may issue a stock split for many strategic reasons, most often because a company foresees major growth on the horizon and wants to keep shares at an accessible price for retail investors. The stock also becomes more accessible to employees who receive stock-based compensation as they do a test. Robert Johnson, a professor of finance at the Hyder College of Business at Creighton University, said investors tend to like splits because it signals that they are invested in a thriving company. Although it might be tempting to want to buy into a pricey stock when it becomes much cheaper to do so, eager investors should make sure that stock aligns with their overall investing goals. However, one shouldn't jump all in just to own Tesla stock. For example, unless it's something that has long been a part of your portfolio objectives. If the average investor was attracted to Amazon before the split, then it is probably a good time to invest after the split, as it is more obtainable. Stever says, however, you should only do so if it is part of a well-diversified portfolio. Yeah, a diversified portfolio means that your money is spread out amongst different asset classes like stocks, bonds, real estate, and the likes that react differently to various economic and financial environments. This minimizes volatility while maximizing return opportunity. Today, Tesla stock trades at around $700 per share and has a market capitalization of $720 billion. If the stock were to trade at the same level by the time the stock split goes through, Tesla stock would be trading at around $233 per share. According to Electric is an American news website dedicated to electric transportation and sustainable energy. Electric is known for its extensive positive coverage of electric transportation in general, and Tesla specifically. On December 28, 2021, Musk disclosed Tesla stock sales totaling $16.04 billion since early November. If the company continues to flourish, this actually might be a great opportunity to invest in Tesla stocks. On March 22, 2022, Tesla even officially opened its German plant near Berlin, supplementing auto assembly plants in Shanghai, Texas, and California. Despite the hiccups and roadblocks caused by the pandemic, which actually affected the world's economy, that said, if you have been considering investing in a particular company after a stock split, can be a good time to do so. Stock splits are generally a sign that a company is doing well, meaning it could be a good investment. Additionally, because the per share price is lower, they're more affordable and you can potentially buy more shares. However, remember that if you're investing in a company after a stock split, approach it with the same level of analysis and curiosity that you would any other company. While a stock split can be a good sign, it's important to do your research before investing in any company. Visit our channel and watch our other videos if you enjoyed this one.